Klarna, the popular buy now, pay later company that you've probably used to buy your Taylor Swift tickets or your tacos, is one of 6 companies that's going public this week. And over the weekend, I reviewed the 450-page IPO filing docs and the financials as a former venture capitalist and investment banker, so you don't have to. First off is the bull case. There are basically 2 main reasons why investors are excited. One is that Klarna, despite very large scale, is still growing pretty quickly, 20% year over year overall, and 38% year over year in the US, where they're a relatively new entrant. They've managed some really interesting partnerships lately, like this one with Stripe, and have taken some very large customers from people like Affirm. And despite this scale, they have managed to keep credit losses the same percentage of GMV, meaning even though they're getting bigger and bigger and bigger, they're keeping the same quality of their loan recipients high, and they're not losing any more than they were before from a percentage of GMV perspective. Second, Klarna is a bank, and there are 2 implications of that. One is that it's making revenue from that source of income as well, because it owns customer deposits, fees, things like that. And then second, unlike other competitors that don't have their own money to lend to customers and therefore have to get it from other people, they're subject to volatile fees and macro trends, etc. Because Klarna has its own base of money from these customer deposits to loan out to people, its costs are much more predictable and potentially cheaper to give out loans as well. Now on the bear case, one, Klarna is playing, especially in the US, in a very competitive space. Second is that despite its structural advantages and diversification, some of those efforts, like becoming a bank, are still early. Third, despite being able to keep credit losses the same percentage of GMV, they have grown in dollar amount quite a bit. In the first half of this year, losses were $310 million. This compares to about $230 million last year. And especially since there's so much uncertainty around consumer sentiment, tariffs, purchasing behaviors, etc., this is something that investors are scrutinizing. And then lastly, and I'll tie this into macro trends, Klarna is not profitable. This would normally not be an issue. There are many companies in the history of the world that have gone public not profitably, but I would say especially in this kind of shaky environment, profitability has been something that investors are scrutinizing more. Klarna tried to go public earlier this year. They canceled it and are coming back. And a big part, I'm sure, are the wave of successful IPOs that have happened recently, especially in fintech. Notably, however, almost all of them have been profitable. Figma, eToro, Chime. If you're a finance nerd like me, this is going to be a really interesting week. I'm curious, would you invest?